Exactly 10 minutes, you should be done.
Sure. Your Excellency, the Speaker of the House of Representatives, the leadership of the House of Representatives, honorable members of the House of Representatives, good morning and thank you, or good afternoon, and thank you very much for sense the urgency and the acknowledgement of the economic challenges and resistance to proposed solutions by various stakeholders. However, I want to emphasize that we are now at a turning point, and the bold reforms underway across different segments of the economy, though initially challenging, are aimed at addressing these challenges sustainably. And really, I would like to emphasize the word sustainably. I'm confident that positive outcomes are already emerging and will become more apparent in the near future. The dedicated and relentless efforts being made are certain to bring about significant and positive changes for our economy. On that note, distinguished members, I'm happy to inform you that as at yesterday, the volume of transactions on our market was over $800 million. This is the first time in many years that it has achieved this level. Notably, recent reports from international rating agencies such as Fitch, Moody's, Standard & Poor, and commendations from multilateral banks like World Bank reflect this positive trajectory, with upgrades to Nigeria's rating from stable to positive. These reports acknowledge the potential reversal of the deterioration in the country's fiscal and external position due to the authorities' reform efforts. While recognizing the painful adjustments, these all point to a direction that will unlock much needed growth and development for our economy in the medium to long term. Honorable members, I acknowledge that despite these commendations, the concerns regarding the cost of living and currency rates remain. Indeed, this is a major topic of concern in our villages, our towns, and our cities. The urgency of the matter is not lost on us at the Central Bank, and I really want to assure you that we're working tirelessly with colleagues from across government, including with the leadership of this House, to bring lasting solutions. Given that this will be the first time I'll be before this esteemed body this year, 2024, please permit me to just very briefly provide you with what we consider our outlook for 2024. Global outlook. I will not bore you with too much of those details given the time challenge, but I'll conclude in saying that globally, the landscape continues to be very challenging, and that key policy priorities involve ensuring durable inflation reduction, addressing fiscal pressures, and fostering sustainable and inclusive growth. The global monetary policy environment is expected to remain restrictive until sustained inflation reduction becomes evident. Obviously, that has huge repercussions for us in Nigeria. Governments around the world must grapple with rising fiscal pressures, necessitating credible medium-term fiscal frameworks to effectively manage debt burdens. On the domestic outlook, which I know is very important to all of us, we know and remember that the federal government of Nigeria Nigeria anticipates a 3.76% real GDP in 2024, slightly surpassing the estimated 3.75% in 2023. This optimism is backed by key government reforms and the expectation of improved crude prices and production, which are set to drive economic growth. Inflationary pressures are expected to decline in 2024 due to the CBN's inflationary targeting policy, aiming to rein in inflation to 21.4%, aided by improved agricultural productivity and easing global supply chain pressures. The Nigerian foreign exchange market is currently facing increased demand pressures, causing a continuous decline in the value of the naira. Factors contributing to this situation include speculative forex demand, inadequate forex supply due to non-remittance of crude oil earnings to the CBN, increased capital outflows, and excess liquidity from the fiscal activities. The shift to a market-driven exchange rate was intended to create a stable macroeconomic environment and discourage currency hoarding. However, short-term volatilities attributed to arbitrage and speculation have been an issue. To address exchange rate volatility, a comprehensive strategy has been initiated to enhance liquidity in the forex markets, and I made reference to the outcome of that earlier. This includes unifying FX market segments, clearing outstanding FX obligations, introducing new operational mechanism for BDCs, enforcing the net open position limits, and adjusting the remunerable standard deposit facility cap. Honorable members, we understand the economic costs of these developments, not just for the economy, but also as they affect ordinary Nigerians. However, as I mentioned in previous engagements, these costs are temporary, and our decisions will address a lot of fundamental issues bothering Nigeria's macroeconomic landscape. Honorable members, these measures aimed at ensuring a more market-oriented mechanism for exchange rate determination will boost foreign exchange inflows, stabilize the exchange rate, and minimize its pass-through to domestic inflation. On the exchange rate, permit me to say that, put simply, the exchange rate is determined by the dynamics of supply and demand for a product or service. In essence, similar to the pricing of cows or cars, the value of the US dollar in Nigeria is determined by the balance of US dollars entering the country and the demand for US dollars amongst Nigerians. Applying this demand and supply principle, let's examine how the exchange rate has performed in recent years. The exchange rate in Nigeria has increased or depreciated due to the simultaneous occurrence of two factors: a decline in the supply of US dollars coinciding with a surge in the demand for US dollars. Looking at the demand side of the exchange rate, it's important to note the growing number of Nigerian students studying abroad. In 1980s and 1990s, the need for US dollars for their living expenses was minimal. However, recent data shows a significant change. According to UNESCO's Institute of Statistics, the number of Nigerian students abroad increased from less than 15,000 in 1998 to over 71,000 in 2015. By 2018, the figure had reached 96,702 students as per the World Bank. Another report projects the number of Nigerian students studying abroad to exceed 100,000 by 2022. Additionally, the UK's Higher Education Statistics Agency noted a 64% increase in Nigerians studying in the country, rising from 1,320 in 2019-2020 academic session to 21,305 by the 2020-2021 session. Given this data, it is crucial to highlight that between 2010 and 2020, foreign education expenses amounted to a substantial $28.65 billion, as per the CBN's publicly available balance of payments statistics. Similarly, medical treatment abroad has incurred around $11 billion in costs during the same period. Consequently, over the past decade, foreign exchange demand for education and healthcare has totaled nearly $40 billion. Notably, this amount surpasses the total current foreign exchange reserves of the CBN. Mitigating a significant portion of this demand could have resulted in a considerably stronger naira today. On the supply side of the exchange rate, to bolster the inflow of US dollars into a country, the economy must earn these dollars through exports, whether oil or non-oil, or by attracting foreign investments. A robust economic foundation is essential to produce goods and services that the global market is willing to pay for in US dollars. When the supply surpasses demand, the exchange rate appreciates, causing the price of the dollar to fall. Unfortunately, in Nigeria, the contrary has taken place. Regrettably, over the past 12 years, our oil exports constituted over 90% of our foreign exchange revenues and have declined from $93.89 billion in 2011 to $31.4 billion in 2020. From the aforementioned points, we can infer that the genuine issue impacting the exchange rate is the simultaneous decrease in the supply and increase in the demand for US dollars. It also seems that the task of stabilizing the exchange rate, while an official mandate of the CBN, would necessitate efforts beyond the bank itself and indeed to an attitudinal change of all our citizens. My concluding remarks, and I know I'm pressed for time, honorable members, my team and I are dedicated to refocusing the bank by giving primacy to price stability. We also aim to build confidence in the Nigerian economy through the maintenance of stability in consumer prices and the foreign exchange market. We are aware that the twin challenges of inflation and exchange rate depreciation on our economy are daunting. However, they are not insurmountable. Monetary policy actions are sometimes inhibited by transmission lags. Nonetheless, it is expected that the policy measures implemented by the bank will permeate the economy in the short to medium term.
Just 1 more minute, sir.
Inflation pressures may persist, albeit temporarily, but are expected to moderate significantly by the fourth quarter of 2024. Exchange rate pressures are also expected to reduce with a smooth functioning of foreign exchange market. We are committed to implementing policies that will ensure a stable macroeconomic environment and guarantee improved livelihoods for all Nigerians. Thank you for your attention, honorable members.